So, Airbnb just dropped some really strong growth numbers, but the stock, it barely budged. So what gives? Well, the answer really lies in two massive, kind of risky bets the company's making on its future. Today, we're going to break down their Q3 results and figure out if those bets are actually worth it. Let's dive in.
Okay, so let's cut right to the chase. Here's the bottom line. The quarter was strong. They beat revenue estimates, and we're seeing some real momentum in those two big strategic plays, AI and hotels. But yeah, there was an earnings miss, and you gotta understand that was all because of a one-time tax thing. The real story here, the one that matters, isn't the headline number. It's how well they're executing their plan.
You know, to really get what Airbnb is up to right now, you have to get inside the head of their CEO, Brian Chesky. This is his core belief. He thinks that the more our world fills up with AI, the more we, as humans, are going to crave real, authentic connections. He's basically positioning Airbnb to be the answer to our digital lives. It's a huge, bold vision, right? And honestly, it's the foundation for every single move we're about to talk about.
First things first, let's get into the hard data. So how did the company really do? Well, the numbers, they tell a pretty clear story of momentum that's actually building.
Revenue came in at just under $4.1 billion. Now that's a solid 10% jump from this time last year, and it landed right at the top end of what they told us to expect. That's a very, very strong performance on the top line.
But what's maybe even more impressive is the gross booking value, or GVV. It shot up 14%. In this metric, which is basically the total value of every single booking made, it actually sped up from Q2 and blew past expectations. That tells you that demand for what they're selling is getting stronger, not weaker.
And this slide right here, it really sums up the whole headline story for the quarter. You can see it clear as day. Revenue beat what analysts were expecting, but earnings per share, or EPS, fell short. But, and this is so important, that miss was almost entirely because of a one-time tax hit of $213 million. It's an accounting thing, not a sign that the business itself is struggling.
So, if we dig into their official SEC filing, we can see exactly how this all shook out. Look, revenue grew by more than $360 million compared to last year. But then look at net income. It's almost perfectly flat. So what does that tell you? It tells you their costs are going up. And that's because they are pouring money into those big, ambitious bets for future growth.
So that's the big question, isn't it? Where is all that investment money actually going? Well, it's all part of Chesky's grand plan, his blueprint, which is really built on 4 key growth levers.
And here it is. This is the official playbook, straight from the company. It's a simple 4-part plan. First, make the main service even better. Second, keep expanding around the world. Third, add new things to sell. And fourth, the really big one, weave AI into absolutely everything they do.
Okay, first up, perfecting the core product. And they are just hammering away at this, launching 65 major improvements. One great example is the new Reserve Now, Pay Later option in the US. The company actually came right out and said it directly helped boost bookings this quarter.
And Chesky was really clear about this on the earnings call. He said, look, these aren't just minor tweaks. When they make the product better, more people use it, they get fewer calls to customer service, and they get more bookings. It's a direct return on their investment in the product.
The second lever is global expansion. And wow, the results here are pretty incredible. These newer expansion markets are growing at literally twice the speed of their main core markets. And to give you a specific example, first-time bookers in India surged by almost 50%. This isn't just steady growth. This is about tapping into a massive new wave of customers.
Lever number 3 is all about moving beyond just being a place to stay, and their experiences are really proving to be a new front door to the platform. Get this, in Q3, almost half of the people who booked an experience didn't even book a stay to go with it. That shows it's bringing in a whole new crowd for a totally different reason.
Okay, so this brings us to the biggest part of the story. And honestly, the most important piece for the company's future. Their massive, all-in bets on AI and hotels.
For anyone looking at this as a long-term investment, this right here is the whole ballgame. Can AI and hotels become the company's next multi-billion-dollar engines of growth? Chesky is betting the entire farm that the answer is yes.
So let's look at the hotel's strategy. Now, this isn't about competing with their core homes business. It's about adding to it. Chesky's logic is pretty simple. Homes and hotels are for different kinds of trips. By adding hotels, they can capture travelers they might be losing right now, for those quick one-night trips, city breaks, or business travel.
And from a pure business perspective, Chesky argues this is just a smarter, more efficient move. I mean, they've already got billions of eyeballs coming to their site. The demand is already there. And it's way easier and faster to sign up a hotel that has a staff and a phone number than it is to sign up individual homeowners one by one.
Now let's talk about the AI bet. And let's be crystal clear. We're not just talking about some generic chatbot. The vision here is a full-blown AI concierge. Just imagine. Search, customer service, messaging, all rolled into one single personalized assistant that helps you plan your entire trip, from the first spark of an idea all the way to after you get home.
And this gets right to the heart of Chesky's whole theory on AI. Specialization is going to beat generalization. His point is that pretty soon, everyone's going to have access to the same powerful AI models. So the winners won't be the ones with the best tech, but the ones who can use that tech best with their own unique data and expertise. And that's where he thinks Airbnb has the ultimate advantage.
Of course, no investment is a sure thing. So to be smart about this, we have to take a clear-eyed look at the risks. So let's turn to the challenges and hurdles that the company itself is telling investors to watch out for.
So I pulled these straight from their SEC filings. This is the stuff that keeps the management team up at night. You've got your platform risks, right? Like keeping hosts and guests happy so they don't leave for a competitor. You've got the big picture economic risks, like a recession hitting people's travel budgets. And then you have the big one that's always hanging over Airbnb, regulatory risk, with cities and governments changing the rules of the game.
But with all those risks on the table, what's the biggest signal of confidence from management? It's this number right here. Over the last year, Airbnb has spent $3.5 billion buying back its own stock. That is a massive return of capital to shareholders and a huge sign that they believe in the long-term value of the company.
Okay, so let's pull all of this together. What's the final takeaway? When you boil it all down, it really comes to one single core question that every investor has to ask themselves after seeing these results.
So, to recap everything, we've got a core business with real accelerating momentum, we have two huge company-defining bets on AI and hotels, and we have a management team putting its money where its mouth is with these massive share buybacks. So, that leaves us with the ultimate investor question: is all of this future growth potential already baked into the stock price, or is now the time to make a bet on Brian Chesky's vision? That, right there, is the billion-dollar question you have to answer.